Going over the trading system results for the day, frustrating price action, hypotheticals minus 7,055. None of the trades were profitable. 0 for 8 today. We had 0 for 2 on the ES, 0 for 6 on the Nasdaq, and the micro, 3 micros was down 2,000 today. The live results were slightly better, minus 2,050 and minus 6,650 on the 200K portfolio. So slippage went in our favor. That's good. The drawdown is now at 22,340 out of around 27K, so about 5K from a worst case drawdown. And depending on that EVP trade, we still don't have clarity on that. It's either 18 or 22K once we get the data refresh. And so about 5K until the worst case drawdown if that EVP trade did not go through. So getting in on a drawdown, we wanted to start during a drawdown. We did. Today was a down day. Tomorrow is Friday. Fridays tend to go in our direction. I think this price action is extremely difficult. I think it's weird too. I think it's awkward and unusual and somewhat manipulated. Look at Monday's price action, and we're just sitting here in this channel right here. We have a very dynamic world right now. A lot of dynamic fundamentals are changing. Bonds just sold off today. Interest rates went up, and stocks are just sitting right here, propped up below those CPI report lows last week. Unusual for bonds. Stocks had been going down as bonds made new lows, but now they're just sitting up here, going in a sideways price action. Last week it kind of did the same thing. We had that wild price action, but it just closed the week around Tuesdays, Wednesdays close. And so just a stair step higher like a fixed income market. I don't know if this has something to do with the pre-election, post-election, maybe the market will sell off or rally. Pre-election pause here in price fixing. I would hope not, but talks of crude oil and talks of stock market, going in favorable directions before the midterm elections. I don't necessarily believe in that, and I hope that that's not the case. But you have to wonder on days like today, why is the market being held up? Let's look at bonds. So here is a 60-minute chart of the Nasdaq. It was kind of held up here in anticipation of the CPI report last week. CPI ticking lower, the market was going to rally. CPI was hotter than expected. It sold off, and then it decided, well, we're going to rally anyways because we want to. And the market is higher than it was on CPI. Here is the CPI report on bonds. These have been moving in lockstep. So bonds are lower, interest rates are higher, while stocks are higher. And so I think there's a mispricing here, and the market is due for some downside. It's just hard to short this market. There seems to be a force that continues to fight shorts and prop it up all the way down all year long. And so we're going to go over the trades on the day and take a look at those trades. So you continue to see trades like this, EVP1. There's a good short setup. And as soon as you get short, the market just wiggles and wiggles and wiggles until you exit, and then it goes down. This happens over and over again. I see in the markets and in test discretionary scalps. As soon as you get short, the market is propped up and fights your trade until, on rare occasions it will go your way, but it seems to really fight short trades. Here's typically what a short trade looks like in this market, and then the market is lower in the after hours on snap earnings, and so after the trade and after all these shorts were exited at lower prices, the market then sells off to the price that it was trying to go to. And so market basically traded lower like it would sell off and then turned into stop running mode all the way up to 2 or 3 day highs, taking out those highs, and then came back and took out the lows of the day and then settled up near the lows, being propped up on the weekly lows. As you saw, we drew a straight line through the week. It's just propped up on Monday's lows. Tick pulse, here's another short trade. It's just, you see this a lot on the short side. Nice short setup. Market goes against your shorts, and then when you get out, it goes your direction. And then here is another short trade. Overlapping Q, market goes against it. Cobra 3, market goes against it. And the market is just that prop-up pattern. It propped up today, and it's really propped up all week. Here is the week-long prop-up that you see. Market gapped up on Monday, went up on light volume on Sunday night, took advantage of the light volume, tried to get its agenda going, gapped up on Monday night, Tuesday morning, and then it came back to these levels on Monday, and it's still trying to hold these. And so, the short tried to short it here. That was a good short. It should fill that gap. Should be some backing and filling, but no dice there. Same thing here. Good short. Market didn't rally properly. Trading for lower lows and filling some of this gap, but no dice once again. And so VTNQ jumped on the long side early, stopped out. Robot NQ tried to take the long trade. Market came back, stopped out. A lot of volatility at the open. Hard to trade with the $400 stop losses. The 11th losing trade in a row on Robot. And so a 20-point stop loss is just challenging on days like today. And let's look at the ES trades. Same thing here, short trade. Lots of short trades look like this. See Cobra 3, short, come up here. Market immediately goes back in its direction when it stopped out. This is yesterday's trade. It does then eventually trade higher, but it seems to have, have it out for the short trades, even though it's down on the year, even though we're in a bear market, it's still fighting shorts. And so hard to short this market. I talked about that a couple of days ago. I think the market should go lower, but it's still hard to short the market. And Cobra CT3, actually we're 0 for 2. Cobra CT3 had a good entry, I thought. Market rolled over though. And so the market went up, and as soon as we got long, it started going down, and as soon as we were stopped out and got short, it started getting propped up and held up again today. So very unfavorable market conditions today. Losing day, minus 7,000 on the 200K, minus 21.16 on the 50K. Tomorrow is Friday. We are in about 5 losing days in a row, and so looking forward to a potential trend tomorrow. Could go either way. Market is due for more selling, in my opinion. I do believe that, let me see here, I do believe that stocks should catch up with bonds. Bonds did this. Even if bonds traded much lower than last Thursday's CPI low, stocks, if they just traded to that CPI low, would be a significant move tomorrow. So 10,500 on the Nasdaq, and we may not get it. We may get propped up price action through the midterms, which are in 3 weeks, I guess, from now. The midterms will be over, and so hope we don't get just choppy price action for the next 3 weeks while we're waiting on the midterms now. And so those are the trades on the day. Down day, look forward to Friday's trade, looking forward to a bounce after 5 losing days in a row. The good news is we missed yesterday's losing trade. We missed the losing streak coming into this, and looking forward to a potential trend, as we haven't had one in a while. It's been a while since we've had a nice sized, decent trend in the markets. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.